สวัสดีครับเพื่อนๆนักลงทุนทุกท่านครับขอต้อนรับเข้าสู่รายการ Business Tomorrow Live นะครับค่ำคืนนี้พิเศษอย่างยิ่งครับเพราะอย่างที่ทุกท่านรู้กันพรุ่งนี้เราจะมี IPO SpaceX นะครับเรียกได้ว่าเป็นเหตุการณ์ครั้งใหญ่ที่สุดในประวัติศาสตร์ IPO หรือว่าตลาดหุ้นนะครับเราไม่เคยเห็นการ raise fund ที่สูงที่สุดแล้วก็มีบริษัท IPO ที่เข้ามาในตลาดที่สูงที่สุดขนาดนี้มาก่อนนะครับ1.75 trillion dollars สำหรับ SpaceX พรุ่งนี้นะครับจะเริ่มเทรดเป็นวันแรกเพราะฉะนั้นนะครับผมเลยถือโอกาสนี้นะครับชวนคุณพอลมารีโนนะครับจากทางทีม ETF เนี่ยมาวิเคราะห์ให้เราฟังครับว่าเอฟเฟกต์ของ SpaceX IPO เนี่ยต่อตลาดปัจจุบันเนี่ยมันเป็นอย่างไรบ้างนะครับแล้วก็น่าซื้อไหมน่ารอไหมนะครับหรือว่าจะเป็นอย่างไรนะครับเพราะว่าครั้งก่อนนะครับถ้าใครจำได้เทปที่ผมเคยคุยกับคุณพอลเนี่ยเราเคยคุยกันในช่วงที่เกิดสงครามอิหร่านนะครับแล้วก็ราคาร่วงมาแรงๆเนี่ยวันนั้นคุณพอลให้ข้อมูลที่ดีมากนะครับคุณพอลให้ข้อมูลว่าการวิเคราะห์ทรัมป์การวิเคราะห์สงครามนะครับแล้ววันนั้นคุณพอลพูดชัดเลยว่าตลาดเนี่ยจะกลับตัวอย่างรุนแรงแน่นอนขึ้นมานะครับแล้วก็ทำ all time high แน่นอนวันที่เกิดสงครามเป็นจังหวะซื้อที่ดีวันนี้เรามาฟังกันครับวันนี้เกิด correction ลงอีกครั้งหนึ่งนะครับเรามาคุยกันว่าตลาดครั้งนี้เนี่ยเป็นโอกาสซื้อที่ดีไหมนะครับ AI จะ bubble หรือเปล่าหรือว่า AI ตอนนี้เป็นโอกาสซื้อนะครับเพราะฉะนั้นตลอด1ชั่วโมงนี้นะครับใครที่มีคำถามนะครับเขียนเข้ามาได้เลยนะครับเดี๋ยวผมจะพยายามถามคุณพอลให้พวกเรานะครับแล้วก็มาลองศึกษาค้นคว้าโอกาสจาก IPO ที่ใหญ่ที่สุดในประวัติศาสตร์ครั้งนี้กันครับเอานะครับเพื่อไม่เสียเวลานะครับ without further ado I would like to invite our guest tonight our special guest all the way from USA live with us tonight Mr. Paul Marino Chief Revenue Officer from Theme ETF
Hey, Chris, how are you?
Hello Paul how are you
I'm doing great.
Thanks for making time on this historic day, which is tomorrow. You know, I just introduced to the fans that we're going to have an historic day in the market. The market has never seen such a huge IPO before. This is the biggest IPO in the history. Not only that, it comes in the time where the market is at an all-time high and at the peak right now. Things are exciting, but at the same time, recently this past week, market seems to be sell off a little bit, Paul, of the fear of maybe the SpaceX will pull out the liquidity from the market. So I told my fans tonight that tonight we're definitely going to be deep diving on the SpaceX IPO, whether or not it's a good investment, what are the takes and what are the insight you might have on the company. But before we dive into the company, I want to talk about the broad market overall first. Since we talked last time, I told the fans that your view was right on the spot, that the war was an opportunity to buy. All right. And a good chance today we're in a similar situation where the market is trading off maybe 4 or 5% off peak for NASDAQ. And just wondering, is this an environment that's same again? It's going to be the dip to buy, or are we getting very close to the top? So want to hear your thought, Paul.
Yeah, I think like every dip right now is an opportunity to buy, and I'm not trying to be overly bullish, but when you think about the technological revolution that's happening, and we could start with SpaceX launching, investors are getting access to private companies, one in SpaceX, which is the largest IPO that's ever happened in the history of the world, where they've never had access to these kind of companies before. And then I think you have to take a look at the industry. We're just at the beginning of space exploration, of rocket launches, of potentially building databases in space, all because of Elon Musk and the great work that he's done at SpaceX. And so from my perspective, when you look at the overall market, it's going to be volatile, it's going to be choppy, there's going to be rotations. Some things will go up and other things go down. People are going to look to take gains at times, rebalance, so on and so forth, especially when we get these big moves up. But there's nothing structurally wrong with the market right now that I could see that's going to overturn the growth of what we're doing in AI. So again, if it was a finite marketplace, I'd be a little bit more concerned, Chris, but it's not a finite marketplace. Like it keeps growing and growing and growing. And because of that, demand keeps growing, spending keeps growing, and all of these hyperscalers and technology companies have to adjust and spend and adapt to grow with it.
Okay, let's talk about, you mentioned spending. Let's talk about spending then, because one of the reasons of this correction is people are fear that there's a lot of fundraising. Not only SpaceX is coming on right now, tomorrow, fundraising. There's Anthropic, OpenAI coming later, and currently all the Mag 7, the hyperscaler, are raising funds somehow in form of more shares or raise fund through bonds and everything. What's all these? Is this fearing you at all, Paul, with all this fundraising?
Well, they used to raise money from the debt market when the interest rates were at zero. But now that interest rates aren't at zero anymore, the Fed funds rate, and they can't get money as cheaply, they're using their growth as an engine for capitalizing. And so it doesn't bother me right now because what we're seeing is it come back in revenue and earnings. And so as long as revenue and earnings continue to grow, and as long as they make progress in this AI build out, I'm not as concerned. I would get more concerned if they were starting to shrink, like they're spending all this money, raising all this capital, and then we don't see the numbers coming out in revenue or earnings. But we are seeing that. We're seeing them grow. And I go back to the pie, right? If I give you one blueberry pie and I said, you have to capture as much market share as you can, you would be, nervous about that, right? You'd have to think about things differently. The difference here is that every day I'm giving you 100, then the next day 200 pies. We keep baking pies, right? So as long as those pies keep getting baked and there's more and more pies, you have to invest for that growth. And I think that's what these companies are doing.
Okay. The growing pie, I think you mentioned earlier that if we're in a finite market, you'll be a bit worried. But now we're in an infinite market. Can you describe that? Why are we in an infinite market right now?
Yeah, because we're just at the very beginning of this, number one, right? So we haven't built out anywhere near what we need to build out in order to achieve the goals that we want to achieve, right? So when you think about autonomous driving, robotics, when you think about all the things that we're doing in AI, whether that's, large language models, agentic, now we're, if you look, we're actually getting into like these humanoid robotics that are going to be personal assistants. And there's so much there. And we need so much high compute, and we're not even anywhere close to that build out. So if you look at all the projects, and if you listen to the experts, they're saying we need way more compute than we have currently today. Those build outs are going to continue, and it's going to be because there's a need for it. So I don't think we're anywhere close to where we are from a build out perspective. And we don't have enough compute right now to handle current capabilities. If we stop today, we won't have the ability to handle what our future needs are. So that's the reason why. And again, we're just at the surface of this. The second piece that I would say to this is, technology is an interesting industry, right? If I said to you, hey, we need to build out infrastructure in pipelines, right? At some point you build out all the pipelines and it's done. And then they work for 50 years or 60 years. Technology is not like that. It changes all the time, right? So even just look at Cerebus, which IPO'd last month. Right? They're in a chip business, right? They make them out of silicon. But their chip is bigger and it's better for inference, right? Opens up a whole nother theme within the theme, right? So you think about AI, now you got another company that makes a bigger chip and they've got moved. So technology changes so quickly, Chris, that even as the pie is growing and we're fulfilling what we need today, tomorrow it's going to be something different.
Okay, I understand your point. Now we know about the pie. Now we know the infinite in the future. And before we dig into the SpaceX, I want to bring you back and talk about the current market. We understand that. But what about the fear of, for example, the current war that's going on? Like right now, in the past 2 days, there's starting to be a firing between US and Iran. And we don't have that, the agreement on the ceasefire yet, the peace agreement. So could that affect, in your view, in the short-term market? Like, I know, should we hold our horses and maybe wait for the dip to dip even more?
So in the short term, yes, Chris, I do believe that it can cause an issue, and it has caused an issue. So back when I met with you in Bangkok, right, I was hopeful that this would resolve much sooner and that we come to a peace agreement much sooner, but it's dragged out too long. So now it's coming to a head. And yes, can that cause volatility in markets? Absolutely. People get concerned of energy costs and top line inflation, which didn't come in so great. It came in a little bit hot versus core. So absolutely, that could cause volatility. But I do believe we're going to get this resolved one way or the other. And I said that back then. We're either going to use might or we're going to negotiate. I think we're at the point now where we're using our might as a country. And I think things are going to change a little bit more quickly. Once that happens, I think you get a little bit more of a steady ride. But absolutely, there are things that are going to cause short-term volatility in the marketplace. But from my perspective, the long-term growth prospects are still there.
Okay.
So I don't want people to get, you have to understand who you are. If you're a trader, if you're a day trader, if you're an options trader that's going in and out of the markets, you do need to be more concerned with timing. But if you're a long-term investor, I think you have to see through some of this noise. And even with the market volatility, we're still in a better place today than we were when I visited you in April, right? And we've gotten through all that and we're at a better place. I think if you look out 6 months, we'll be in a better place.
Okay, so similar situation, you view that this is a dip to be buying, but again, you do admit that the escalation of the war was much longer than initially expected. So what do you suggest investor then, like with this volatility, is just to kind of plan your strategy well into how would you engage this long-term growth then?
Yeah, so if you have high conviction in some of the areas that I have high conviction in, again, AI, technology, humanoid robotics, globally systemically important banks, things like that, I'm going to be long-term there. I don't want to try to time the market because I have long-term vision for those themes, those sectors, right? But if you're a short-term trader, just like anything else, you should have a process for when you get in and when you get out, what you want to gain in a certain position when you're making that trade, what you're willing to lose, and be very disciplined in your approach. If you have that process as a trader, then you on a day-to-day basis, you can make informed decisions, without getting too crazy. And the other thing that I would say is, don't invest for timing, even if it's long-term. So always make sure you have enough liquidity for your life. If you're taking everything you have and putting it into a theme or sector that you're very, very bullish on long-term, but you don't have the liquidity that you need for the given day or the given month or the given year, I can't help you with that timing, because sometimes things go, just as planned. Other times there are road bumps, speed bumps in the road, like the Iraq war, or yields and interest rates going higher. So you do have to plan to stay invested in that market if you have high conviction and have enough liquidity for your day-to-day.
Understand. So focus on the big picture, plan your liquidity, and which is very important, like Paul said. And then there will be short-term volatility. So on that topic, let's talk a little bit more, because you just mentioned inflation. There's also a fear that the inflation will drag on, the CPI will be high, and the Fed, with the new Fed chairman Kevin Warsh, maybe he's forced to raise interest rate. What's your take on that? Is that possible?
So anything is possible. I don't think Kevin Warsh is going to raise interest rates, though, and I don't think he'll be forced to do anything. I think you're going to see a change in philosophy at the Federal Reserve with the new chairman in Kevin Warsh. So he believes that lowering interest rates spurs growth. He does not believe that it causes inflation, right? So I think we're at the peak of interest rates right now, unless things get really hairy. Because again, if you look at top line inflation, that's what spiked. There's an obvious reason for that with the Iran conflict and energy, so on and so forth. But if you looked at core inflation, it was moderate. It didn't really spike. And so he's going to be looking at that, knowing that hopefully we get past this Iran conflict, top line comes down, and we have a more moderate overall inflation picture. And for him, again, he doesn't believe that raising interest rates or lowering interest rates causes inflation. So he thinks it spurs growth. We want growth to outpace any inflation that we have. And by the way, current inflation, even at 4%, that's tough, but it wasn't as bad as it was over the last few years before this administration got in. So if we could just get that top line back down, use our growth to outpace inflation, I think we could be in a good spot. So I'm concerned about it. I'm looking at it. I think the bigger picture for me is long-term interest rates. If long-term interest rates continue to trend up, that's going to cause a problem for the housing market. That's going to cause a problem for, car dealerships and smaller businesses. And I think that's what we have to really, worry about. But again, all this can be controlled if we get the conflict over as soon as we possibly can with a positive result. And if Warsh comes in and finally says, hey, I feel comfortable enough with overall inflation that we can lower interest rates. And Chris, if you ask me what my opinion is, I actually think we'll see cuts later this year versus an increase. I do believe that because, again, I don't think he thinks interest rates are the reason why we're having the inflation. So I think we're at the top level right now. I don't think he raises them. And then potentially, and I'm going out on a limb here, I think we could see as this moderates and as top line comes down, I think you could see him make the case for an interest rate decrease. And that would be good for the markets.
Interesting, Paul. But you agree that the long-term interest rate is very important. And right now we're sitting at 4.5%. It's bond yield. That's not low. So why are you confident that, that this will be able to hold at 4.5? Why would this not peak and go on longer, especially with the war dragging on, like you said?
So historically it is low. What we've had since the Fed's come on board, years ago is this, overarching control using interest rates, right? And so, during Volcker, they spiked really high because he really wanted to tamp down inflation. Then during Greenspan and Bernanke, they started, lowering interest rates, getting them all the way down to zero. And then we saw the long-term rate come down because they were trying to spur, increase, prices. I don't know what they were doing actually to keep them that low for that long. But the bottom line is, if you look historically, 4.5% on the 10-year, that's not super insane. The problem is it's the housing market and some of the things that, we borrow money for had gotten so overheated that there's a crossroads when it comes to the valuation of homes and how much you have to borrow and what your interest, what you have to carry in interest to pay for that home. And that's where the disruption is. And so over time, if we can grow the economy, if we could get sellers to start being more reasonable on, where they want to sell their houses and things like that, if car prices come down a little bit, that would be a better situation than just, doing everything we can to jam interest rates down, because I don't think that's the solution.
Thank you, Paul. Last question on the macro before we go into SpaceX. Our fans are waiting on that. Is that we last talked in April, I believe, a few months ago. The war that time, people think it's gonna end soon. The market is pricing that in. Now it's been 3 months. It's not ending. Situation with the inflation, despite you're not worrying about it, it is getting a little bit worse than 3 months ago. Why is the market up so much from that point then? If all the concerns seem to be worse than in April, why is the market so much higher in April? Is this is it all because of AI, because of all the tech growth that you mentioned, or what's the real reason why the market's high right now?
So one is definitely tech growth, the growth of companies. So it's indisputable. Earnings season proved that these companies are able to grow substantially regardless of the macro environment. So that's number one. Number two, I think the trip to China with Trump really did something good overall. It showed that, even if we're adversaries, we can sort of work together and be cordial and figure out ways that we could do business together. And even though nothing formally, truly formal has come out of that, I think it was a good way to sort of, think about that relationship moving forward. And the fact that China did not get involved in what was going on in Iran. And then I didn't say that I'm not worried about inflation. I am worried about inflation. But again, you have to think about why that top line number spiked up over 4%. And again, it's because of what's happening. I think there have been some critical errors in how we've handled the war, negotiating with Iran. They've tried to, drag this thing out longer, thinking we cave in. But we're not going to cave in. The United States is not going to cave in. And this will come to resolution. And once that happens, what traders are looking at, what investors are looking at is that underlying core and saying, hey, with all this growth, with everything else happening, I think we could get through this. And the core inflation is still intact. I don't want to sell this market. I want to stay invested. And I think that's the reason, Chris, that people have taken the market to new highs. All those things.
What has to happen in this world out there right now that will actually make you sell and be less invested in the market right now? What situation would that be?
There'd have to be some kind of real shock. Oh, one other thing I want to say is oil prices. If you look at oil prices, they never took that big spike to 120 or 130 or 140, right? We literally opened up some supply, right? So there'd have to be a real energy crisis, number one, like a real energy crisis where we had no more supply, things were totally shut off, and people were in crisis. I think on the long-term rates, if they start getting the the 10-year, if that gets to 5.5, 6, I'm going to become way more concerned. I think if the Fed goes hawkish and raises interest rates, I would be a little bit more concerned. And I may not sell everything, but I would definitely trim, and I would be much more cautious. But all of those things would impact me more than a top line inflation over 4% now because of something that's going on geopolitically.
Understand. So you're watching these closely, and at the moment you're watching closely. You're not going to make any actions taking profit until you see all those concerns you mentioned.
And on the corporate side, if I saw people really pull back on CapEx, like it's encouraging for me, like that they're going to the markets, the capital markets, to raise money to invest. But if I saw them pulling back on CapEx, well, then there's something wrong. Like, why are we pulling back on CapEx? Was this all a hoax? Like, are we not investing in this thing anymore? Is the build out not important? So if on the corporate side, if I saw them pulling back on CapEx, that would be another reason why I would be cautionary and potentially trim.
That is an interesting point. So what's the period that you feel like if they're going to see result of their investment, and if they were going to pull back those CapEx, in which period are we going to see? Like, it's definitely not within these 3 months, right? That's why you're still invested in these 3. Like, when would those period come?
I don't know. I mean, you'd have to start seeing the signs of it in earnings calls. And right now we're not seeing any signs of that. In fact, it's actually quite the opposite. If you're invested in, if you're part of the AI ecosystem, part of the build out, part of the 5-layer stack, you're doing very well, and there's more demand than you could possibly imagine. If you're a component of that, like I like to call a theme within a theme, so like memory or like photonics or anything like that, you're actually growing, and we see that jumping up. Even software and cybersecurity came back, even though it's taking a little bit of hit over the past couple of days. You did see a rebound of that because we're realizing that software is still critical. So if I were to see earnings results or people not investing anymore that were not growing or on the line, that's what would give me pause. If I saw CapEx decrease, that would give me pause. We're not seeing any of that. So when that's going full steam ahead, I try to look through the noise that we hear in the marketplace.
Interesting to hear your thought, Paul, because the market are worried when they see those CapEx, but you're coming on a different view that, oh, that's good. That means the company must be seeing something to be able to spend, willing to spend that much and raising capital.
Yeah, companies are not willing to invest in things that aren't going to go anywhere. And sometimes they get it wrong, but like I'm hard pressed to think that they're getting this wrong. Like this is a real thing that's happening now. And so we're either in or we're out. And so everybody is in because they have to be.
Okay. That brought up another question I want to talk about before I go to SpaceX. So sorry to the fans, let's wait a little bit. Is that on this market, some people are saying that we might be at the top because we're getting silly when Jensen Huang, is in Korea and Taiwan, going on stage, speaking about companies, and their price is up like 20% after he making speech about each company. Trump as well. Trump's been tweeting about companies. They're going up 20, 30%. Like, are we really in a silly market, Paul? Or, is that a sign of a top?
No, there's aspects of the market that are silly for sure. And there always is. And those are speculators, right? So yes, you made the comment about Marvell being $1 trillion company. And then all of a sudden, boom, the thing goes straight up like a rocket, parabolic. Any parabolic move that you see, you got to be cautious for sure, 100%. And again, it depends on what you are. Are you a long-term trader, or are you a long-term investor, or you are a day trader or a short-term trader, right? So I agree with you. There's always silly things that happen in the market. Like I find the betting markets silly. I find like the Kalshis of the world and the all those kind of I can't even remember what they're called, but like the percentage, like I find those silly. Like it's hard to the prediction markets. That's what I was trying to get at. I
Yep.
find the prediction markets silly. Like I would never invest in that, but there are people who do and they have fun doing it. I hope they are not, investing too much in that stuff. But there's always silly moments inside of, bull market runs that last over periods of time. There's always speculation. There's always going to be. But that's what I try to avoid. Like I didn't jump into Marvell the next day because Jensen Huang said that. Like I have a process in place for how I think about investments and how I, think about them long term. So again, maybe it piqued my interest. Maybe I read about it. I read about a lot of things. But I think what people have to do is their due diligence after they see that stuff. Let those people do whatever they're going to do, and then make your own decisions. From an intelligence standpoint, from due diligence standpoint. Don't always try to follow the immediate trend.
Okay, so you are aware of those. You try to be careful, and in a big, infinite market uptrend, obviously there'll be some silly spots, and maybe that's a sign that the things behind this AI rally is real, right? That's why people are excited when they hear this and that. Yeah,
they don't want to miss it. It's fear of missing out, right? Like that's a real thing. FOMO is a real thing, but you got to be careful with that because again, I don't know when the top's going to be, but if you constantly play the fear of missing out game, one, if you didn't do your due diligence and there's a structural issue with the company, you can get your head chopped off. That's number one, right? So always do your due diligence, even if you're feeling that FOMO, right? But also at some point, Chris, I'm not saying the market's going to go up forever and that we're not going to have a major correction again or anything like that. And we could potentially be building a bubble, but again, I said this last time, the bubble is not about to burst. We're not even near. You have to hit over capacity for a bubble to burst. We're not near over capacity, all right? But one day, potentially, we will be, okay? And then it's going to be, trouble if you don't have an exit strategy, right? And a lot of people get caught in that. So playing that FOMO game all the time will either get you hurt in the short term or hurt in the long term. I just prefer like due diligence, getting high conviction in either individual names or individual themes, and then making sure you have a process for how you invest, whether that's long-term or trading, and then know your exit strategy. Everybody's got to have an exit strategy.
That's a good point, Paul. Thank you for your thought. It'd be very useful for Thai investors to prepare themselves with that strategy and that mindset for this hyper AI growth in a few years that we're in to come. All right. Yeah. Now let's get to the exciting part. Thank you for sharing your thought about the market and overall. But tonight, a lot of people comes in to listen to your view on a historical day tomorrow, the SpaceX IPO. We talked about silly market just now. What about the SpaceX IPO tomorrow? Like, I wouldn't be surprised personally if we see these things go like plus 20%, plus 30% tomorrow with all the liquidity that's, not much shares been released, right? So, but what's your thought, Paul? Like, take us through the process. Like, what's the important things to be watching for and how to prepare for tomorrow historic IPO day?
Yeah, let's start with Elon Musk. He's one of the most important innovators and entrepreneurs that has ever lived. He's, in my opinion, a genius. And the things that he's doing are so important, that it's really incredible to see this come public. So we've had this incredible company that's been locked up in a private market. I think going public is amazing for investors. We're finally getting access to this unbelievable company. And so my anticipation is that there's going to be a lot of excitement around it. And you said 20, 30%. You might see 40%. You might see 80%. I mean, when Cerebus launched, like I said a month ago, when it first went live, it was up, I believe, over 100% immediately, right? So you never know how these things are going to go because there's so much excitement around them and so much enthusiasm. And SpaceX compared to Cerebus is like 1,000 times that excitement, right? It's the largest IPO and it's Elon Musk.
And you have no ceiling in the US market, to be clear, because in Thailand, on the IPO day, you cannot go over 30. If the stocks any day go over 30, they stop trading. You don't have that in the US.
No, in the US, it just continues to go. So maybe that's why we do see a lot of interest in Asian traders like trading on the US stock exchanges because they don't have those limits. I have no idea.
Yeah.
But the point that I would make is when you think about SpaceX, it's such an extraordinary company. And it's one of those things where, again, for all that it's done and for all that it's worth today, it may be out ahead of its valuation, right? And we won't know that until it lists and then it we see where it's trading at, because there's so much enthusiasm around Elon Musk and around space and what his potential could be. And a lot of Elon Musk stocks have always traded on potential. I mean, like when you looked at the valuation of Tesla back in the day, even now today, it's hard to understand the valuation of it, but people are buying his future genius. And that's what they're doing with this too. So when it comes to market, what I would say is I'm going to be watching just like you are. I'm not making any moves. I think in times like this, if you haven't gotten into the IPO price prior, or you weren't an early stage investor, it's good to let the market settle out. A lot of times with these big IPOs, what you see is you see them, spike really high right after because of all the enthusiasm. But then over the next days, weeks, months, they start to come down, 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 down. I keep mentioning Cerebus because that just happened recently. That's what happened with that. Went up over 100% of the IPO price, and then it came down, 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 down. And so now it's sort of stabilized a little bit in the 230s range or so. We'll see what happens from there. And again, on the hype, I have no idea what's going to happen, Chris. It's going to be really fun to watch. I'll be watching like you. I would imagine there's, because of the enthusiasm, that's going to go up. But we check the chat boards and we check what investors are saying. And some people are saying they're staying on the sidelines. Some people are saying they're going to short it. So it's going to be a really interesting day. But the most important thing is that an advanced company like SpaceX is now accessible to retail investors and the everyday man on exchanges. And that's the really cool part of listing an IPO like this into the markets. We finally have access to it. We can then make our decisions.
Okay. So it seems like Paul said, doesn't matter. Your point is, doesn't matter tomorrow if it goes 50%, 200%, whatever. The important point is that we now have one of the most exciting company in the world trading and accessible. So despite what happened tomorrow, plan your long-term investment well with this opportunity that's came on public, right? Correct?
Absolutely. And then there's going to be other ways that you could play it. I mean, like, we're launching ETFs around it. There's so much hype around this. So at Leverage Shares by Themes, we're launching, 2 times long daily ETFs to the upside on SpaceX and a 2 times short daily ETF on the downside. So and there's others in the industry that are launching, various different things that are going to have this as a component. So really interesting times for the industry and the space. There's going to be lots of ways that people could get access to SpaceX. And, like I said, it's just a great day for investors all around the world to be able to have access to the ups and the downs of SpaceX, which is an unbelievably innovative company.
Thank you, Paul. Just wanted to share with the Thai followers that tomorrow, SpaceX IPO is purely the share trading, but on Monday, you guys can participate since, early morning, that there will be leverage shares 2 times long, 2 times short. You can participate in that. And, nowadays it's a popular vehicle for investor, especially when the market is volatile, then you can use these leverage on up and down to help enhance your portfolio return. So yeah, so great product that's out there, Paul. We as investor in Thailand will definitely have to take a look.
Cool.
Yeah. Okay. Now we got the short term out of the way. What about longer term, Paul? You said it's an incredible innovative company, but do you see a scenario where this, even if it goes up 200% on IPO, do you see a scenario where this thing came back down to earth and goes much lower than IPO price in the future? What's your view?
In my human brain, yes. I do see that. A lot of times there's so much hype around these. People don't want to miss out. And FOMO is really, really strong. You could see it spike up. Again, for me, I'm not the type of person, if I can't get in on an IPO before it lists, it's hard for me to jump in on that day. And I've known too many people in my life that have and then gotten their heads chopped off. So that's not something for me. So yes, I could see a scenario where it shoots up and then I could see pressure on it after the IPO. For anybody that was in it, because there are some retail investors that are getting in it, just think of a scenario, Chris. If you bought it at the IPO price and you're a retail investor and it does jump 100% on the day of trading, like, wouldn't you sell? I mean, you just made 100% of your money right away, and you know there's going to be another better buying opportunity. So people will take profits, the ones that can, if it really jumps up that high, and you're going to see some volatility. But again, I think, I miss Tesla. Personally, I miss Tesla because I was always concentrating on the valuation. And I was using the wrong valuation metric. I wasn't thinking about the future growth, right? So I missed that one completely. I'll be looking at SpaceX very, very carefully, and I'll be looking potentially for an entry point down the road. And again, it's just one of those companies that I think is at the forefront of the new frontier, right? We're doing AI here, and we haven't even built that out. Now he wants to take it to outer space. It's really, really remarkable. And I don't know, besides that, it's all the rocket launches, satellites that have to go up and all that stuff. He does, that's a big business for them. And then Starlink. I don't know if you've ever used Starlink, but I have to tell you, I was taking an early morning flight one morning, and we had something come up with work, and I had to be online. And I almost thought about canceling the trip, but I had Starlink on it. I'm not going to tell you that United Airlines now has Starlink on their airlines, and I just happened to be on United that morning. And Chris, I was able to work fully and completely with internet on a plane. 33,000.
How was the signal? Delay or no?
Better than my home.
No way.
Better than my office. It was fantastic. So this is an unbelievable company. I'm not pitching for them. I'm just telling you that once the dust settles a little bit, I will be looking to see where the right valuation is. So I think there's a lot of future growth here. Just pricing is going to be interesting. Day one, day two, week one, week two.
Wow, great thought. So I think Paul dissect this strategy into two parts. The IPO day is, anyone knows, what will happen. There could be a hype. If you get the IPO shares, great for you. If you want to take profit IPO, I mean, do your own research. But in a longer term, this excitement, there will be price fluctuation. Plan it well. It's an exciting company. There's another chance to enter in the longer term. So there's probably a two-stage of this play. Once the dust settle, But in your mind,
you're not going anywhere, so there'll be more than two stages to get in and out of SpaceX. But it's you don't have to. You're not. I'm not going to tell anybody what to do. Everybody's got to do what they want to do. But if you are nervous about it, if you don't believe in the valuation, if you don't have conviction in it, don't do it just because you feel like you're missing out.
Understand. The reason why I separate the two parts, because despite, a lot of people hear that it's quite expensive, so they probably expect the stocks to come down. I just want to share a point where the first day is not the day that you go out there and short it. That's what I'm trying to say. That
I wouldn't want to be on either side of that. I'm just gonna watch, like I watched the Knicks game last night. I'm just gonna watch this one and maybe eat some popcorn.
It could go like the Knicks game, it could be up 29. And then by the week's over, could come back down. So similar to the comparison. Paul, I'm gonna start asking questions from the fan, and I'm gonna translate to you in English. So this Ferrari guy, he's asking, if SpaceX start trading tomorrow, how will that affect Tesla? But I want to broaden the questions further. That how will it affect Tesla and the market overall, Paul, in your opinion?
Well, you could see there's a lot of different scenarios. A lot of the Tesla investors aren't getting rid of their Tesla positions, the one that believe in Elon Musk. They're sort of the early adopters of SpaceX as well. They're adding additional capital. I don't know if you're an Elon Musk believer, and again, going back to if you believe in his future vision that he's going to grow into that, you're probably not the ones that are selling out of Tesla and getting into SpaceX, especially if you've had long-term positions in Tesla. Why would you take the tax consequence? I don't see that being a huge issue. What we've heard is a lot of people making rotations out of other stocks. So we talked about the volatility, Chris, that's going on in the U.S. markets, right? Some of the thought is that people are trying to free up capital in order to invest in the SpaceX IPO. Again, I don't know how true that is. Maybe some of that is true. But I don't know. I think there's a lot of capital out there. There's trillions of dollars of money market assets in the U.S. I think there's plenty of capital to go around. So I'm not exactly sure. So it'll be, like I said, it'll be really, really interesting to see how it plays out. But there's definitely a ton of interest in SpaceX alone. And I think you'll see capital flowing into there. And I think overall, it'll be an exciting day in the markets. Just because they do well doesn't mean that the rest of the market has to do poorly. In fact, it might be a boost for the rest of the market.
Okay, so that correlation is you, like is not known. You gotta wait for it. Like you can't say for sure if SpaceX do well.
I don't have a crystal ball. I wish I did.
Okay. Mr. Williams said, I will load up my port with SpaceX down the road. Good insight. Just want to make sure that this is not a financial advice, but thank you, William, for sharing his thought to Paul. Yeah. Okay. Let me ask you, let me move on quickly because we have about 10 minutes left. What about the next two IPO? Because we're hearing in the market that Anthropic and OpenAI will eventually come to the market too. What's your thought on those? And
so I'm gonna sound like a broken record here, but again, it's two private companies that investors haven't had access to that they're gonna have access to. So I like that. And what I think you're starting to see, Cerebras first, you got SpaceX coming out now, OpenAI and Anthropic have listed. These are big companies, right? That have been private for so long. There's a lot of money in private companies right now that I think investors want access to. So what I think first and foremost this is going to do is spur these private companies to come to IPO, especially if we have successful IPOs. That'll get them to come to the open markets, and that will give investors access. You know, both companies are part of, a major part of this AI revolution. They're both very similar in a lot of ways and different in a lot of other ways. And so it's giving investors choice. I love choice. You get to do your due diligence. You get to figure out, which management team is better, who's growing faster, who's more innovative, who's executing better, so on and so forth. So for me, having them both come on board, getting that access, and then, being able to make a decision based on two similar companies, I love it. I think it's great for the markets. I think it's great for investors. And again, these are two incredibly important companies to the overall AI movement. So we're super excited about it.
Can you share with us, not financial advice, but your thought on the three company? How would you rank them as an investment opportunity in longer term?
My personal views?
Yes.
I would put, so I don't want to rank them per se, but I'll say, I have a better feeling about Anthropic and SpaceX than I do about OpenAI for lots of different reasons that everybody's, read about. I trust Elon Musk as a manager and an innovator and an entrepreneur and an executive. I would say the same thing about the management team at OpenAI. They left. I'm sorry, at Anthropic. They left to do something. They left OpenAI, right? So when you think about the management team at Anthropic, and they seem to be like, I use the tools myself. Quite honestly, like Anthropic and Claude is like unbelievable for me. It does so many incredible things. So I'm really, and I know that's a small piece of their business, but I just have a really better feeling about those two than OpenAI. But who knows? Things could change. I'm always open and I'm always doing my due diligence. But from what I've seen and from what I've done, I would stack those two above the other. But again, that's why I like having competition.
Okay, that's great idea and to hear from you, Paul. And hopefully we can get some update from you more and more to tie investor as we go along closer to those IPO, as well as the market, like you said, because you're watching out for those inflation and capex investments. So hopefully we can talk more and more and update on these few. We have about 5 minutes left, Paul. I want to get to this last topic because we're talking about space a lot right now. We talk about AI a lot, but last time we talked in April, there's a lot of other excitement themes out there, that we haven't discussed in the show tonight. Is there any other themes that you feel like is so interesting to you, but the market hasn't talked about it enough, and that's why it could be an opportunity?
Yeah. So again, I'll go back. We sort of we're very bullish on transatlantic defense, military spending, and defense. And then all of a sudden it got very, very quiet as if we don't have any more conflicts in the world. And the bottom line is spending on military and defense and aerospace is not going to stop. That helicopter that was shot down off the coast of Iran, right? They used a autonomous boat going 100 miles an hour to go out and rescue those pilots. It's the first time it's ever been done in the world. What we are doing militarily and what we're capable of doing militarily is so incredible that the spend is going to continue not only in the United States, but around the world, because especially with Europe having to keep up their defense. So we just see that investment going and continuing, even in bad times, it's a defensive play. So we really like aerospace and defense, and we're very, very bullish on that. We have an ETF NATO that covers that pretty well. On the other side, humanoid robotics. Again, that's one part of the total, AI movement, right? So it has all the components of AI, chips, memory, inference, all of that stuff, but it's in another sector. And again, that's in early stages. So we think, it was sky high at the beginning of the year. It saw some volatility because of the energy issues coming out of the Iran conflict. And what I think could happen now is as we get this thing resolved, you can see return bullishness. Also, we love the fact that Jensen Huang was there. They're making investments in him, and he's working very well with South Korean companies, which play a large part in humanoid robotics. So we're very, very bullish on humanoid robotics. And then I'll go back to one more thing. Overall, the global financials, the largest financial institutions of the world, the largest banks, the G-SIBs, they play a crucial role in all of this build out, all of the infrastructure, all of the investment. They're less interest rate sensitive. They're integrated. They've got the most deposits. We really are still bullish on that space as well. So those are three things that I would say we really are excited about.
Okay. So defense, humanoid robotics, and don't forget about global financials. I have a question on global. The first two, I think, is quite clear as you explained it. Global financials, is that not getting disrupted by AI, Paul?
No, I think AI is going to help.
Part of it.
I think AI is going to help. I think the tokenization of everything is going to make them more efficient. It's going to get their valuations changed from, a stodgy old financial institution to more of a fintech kind of corporation. It's going to create tremendous efficiencies. I don't think AI is going to disrupt them. I think AI is going to complement them. And by the way, if there's any kind of AI technology that is so disruptive that it would, really be an impediment, they'll buy them. They'll buy them or they'll license them. Like, I think they have to work hand in hand. So I just see tremendous amount of upside and efficiencies created in the financial space through tokenization that you're going to see a lot of growth ahead, in my opinion, for the largest institutions that can adopt that more quickly. And then, by the way, let's not forget, we have all these IPOs coming out. The IPO market is starting to up again. So the largest institutions in the world, they do well with all of these IPOs. They make a lot of money on that side of the business. So very, very bullish on that sector and that space.
Thank you. And all these sectors that you talk about, I know you mentioned earlier that we're in an infinite market. So maybe talking about valuation, talking about PE may not work in your new playbook. But out of all these themes, is there a theme that, like, if I'm a risk-averse investor, I don't like, I don't want my stocks to have a lot of drawdown. Is there any type of these theme that's still trading at low valuation, in your opinion, Paul?
I think we just have to think about valuations a little bit differently. You know what I mean? Like, that's the first thing I would say, because, if you're in a growing pie, you have to look for growth at a value price, which is different than just a traditional value investor. But, I think we may look back and look at something like software and cybersecurity as being a little bit undervalued now. They've gotten beat up really significantly because, the thought was that AI was going to take over and that there would be no use for these companies, that all the licensing would go away, so on and so forth. And then they came out with some really good earnings and they had a move up. So I would look for growth in value names. That's what growth at a value price. And that's what I would think about when I'm thinking about valuations today. You could always go into spaces like copper, who I think still has a lot of room to run and hasn't run up as far as gold or silver. But in today's day and age, I think you really just have to reframe how we think about valuations and look at it with a growth tilt.
I understand on reframing the valuation. That's a very important point for investor to study on that. And thank you for mentioning copper. So you do look at alternative asset as well, Paul?
Oh, absolutely. We have miners, mining complex at themes, ETFs. Gold's gotten beat up a lot. If you're still long-term bullish on, the devaluation of the dollar and using it as a store of asset, I think, people were asking me when it was over 5,000 and parabolic, like, should I get in? Should I get in? I would say, anytime you see a move like that, pause. Waiting is probably better for you at this point than just getting in.
Mm.
And now look where gold's trading today. So if you were bullish on it then and wanted to get in, you didn't pull the trigger. Now you might start thinking about where you in chin. So we like gold miners. We like silver miners again. They've had a little bit of a pullback. So the mining complex is a place where potentially you can get a little bit more value, a better valuation than you had in the past.
Gold's been beat up quite badly, but copper is still holding up. Like you said, it's an essential commodity. Yeah.
It never
Quick
had
question.
that symbolic spike like gold or silver. So that's why I was, I don't make recommendations, but that's why I was talking about the potential to think about copper instead of those two when they had gone parabolic.
Thank you. That's a great thought. And I know you don't make a recommendation, but 1 year from now, the copper theme is still, like you said, if the build out of AI is still real and as strong as you mentioned earlier, then copper is definitely, will still be in the theme, correct?
Yeah, I think so. But we're seeing photonics come into play as a better conductivity alternative to copper. I don't think it has to be one or the other. They're going to increase demand for photonics, and I think that's going to, be a part of all this. But copper is still a major component for all of the AI build out, the data center build out, the semiconductor chips, for cooling them with panels, and then for also the conductivity. So I'd still be bullish on copper a year out from now. I also think the commodity space is heading into a super cycle, and I think that'll benefit copper too.
Okay. So do you have a theme on photonics?
No, we do not right now. But
okay,
stay with me. Maybe the next time we talk, we will.
Okay, then look forward to that.
Works.
Okay, so that's all my questions. Thank you for your time today, Paul. Any last thought that maybe I have not asked? Anything you want to share with a Thai investor? Please go.
Yeah, first of all, thank you for your time and attention. I really like being in front of the Thai investors, and my time in Bangkok was unbelievably wonderful. I really like getting their feedback, talking to them. Such a high level of investors in Thailand. And then to you, thank you so much for being a friend, being a great person and a great investment mind, and bringing all this to your audience. I just really appreciate the time here.
Thank you very much for your time and your thought, Paul. We definitely also want to look forward more to your view more and more and get updated on those. Yeah,
anytime.
Thank you.
Anytime for you.
Thank you very much, Paul. Yeah. Thank you, everyone. That was Paul Marino, Chief Revenue Officer from Theme ETF. ขอบคุณมากๆนะครับทุกคนที่วันนี้มาฟังเรื่องราวของการลงทุนใน AI, SpaceX, Anthropic, OpenAI นะครับแล้วก็มุมมองตลาดโดยรวมนะครับใครที่เข้ามาทีหลังนะครับเรามี time stamp ในเรื่องต่างๆที่คุณ Paul Marino แชร์มุมมองต่างๆมาแล้วนะครับผมต้องย้ำเลยนะครับว่าครั้งก่อนที่ผมคุยกับคุณ Paul ในเดือนเมษายนเนี่ยมุมมองคุณ Paul เนี่ยคมมากๆนะครับเพราะว่าตอนนั้นที่ตลาดร่วงแรงเพราะสงครามเนี่ยคุณ Paul ย้ำเลยว่าอย่าเพิ่งขายนะครับมันเป็นแค่ความกลัวนะครับแล้วตลาดจะปรับตัวกลับสูงขึ้นมาแล้วทำ all time high แน่นอนแล้วก็เป็นไปตามจริงนะครับครั้งนี้คุณพอก็แชร์แล้วว่าทำไมยังเป็นโอกาสในการซื้ออยู่และเขากำลังกังวลเรื่องอะไรไหมแล้วต้องจับตาอะไรนะครับไปลองย้อนฟังกันดูได้ใน time stamp นะครับวันนี้ขอขอบคุณทุกท่านที่เข้ามาฟังนะครับวันนี้ใครเข้ามาแล้วอย่าลืมฝากกดไลค์กดแชร์นะครับแล้วก็กด subscribe กับทีมงาน Trader KP ด้วยนะครับสำหรับค่ำคืนนี้ผมขออนุญาตลาไปก่อนนะครับสวัสดีครับ